Hi everyone, Neža here, and welcome to Stock Break, where I give an in-depth analysis on public companies in under 5 minutes, breaking down their fundamentals and potential valuation. Let's dive in. Hello everyone, and welcome to another Stock Break episode with me, Neža Molk. Today we will talk about one of the most hyped home gym equipment companies, and that's Peloton. But before we start, let me just remind you that this presentation is for educational purposes only, and it should not be taken as investment advice or recommendation to buy or sell any financial instruments. I know you guys already heard about Peloton before, and maybe some of you even use their gear in your daily workout routine. If you do so, let me know in the comments. But if we talk about the company was founded in 2012, and it quickly gained traction because they didn't focus just on building equipment, but also on building a community. So their success was not just in that bike, but in creating global fitness community through their interactive platform. The company went public in September 2019 with IPO price of $29 per share. And obviously it reached its peak popularity during pandemic when it reached also its all-time high as everyone was working out from home. But as many pandemic darlings, when world reopened, Peloton struggled, and that was reflected in their stock price, which plummeted by around 80%. And now it is still trading more than 90% of its peak. But actually, if we take a look at their recent performance, we can see that their stock price skyrocketed by more than 100% since their 52-week low, which was made in May 2024. So the big question for today's episode is there a hope for a big comeback? To answer this question, as always, we have to take a look at their business model and also at their revenue streams, because they really evolved over the years. At the beginning, Peloton made most of their money from selling its hardware like the bike. But then pandemic hit and Peloton saw a massive surge in both hardware sales and also in subscription revenue. After the pandemic though, Peloton experienced a sharp drop in their hardware sales. However, subscription revenue remained fairly stable. So by 2024, subscription revenue made over 60% of their total revenue. And with that, it became their primary source of income. From this data, you maybe already guessed what is our next key metric. That is obviously subscribers growth. This number also reached a significant milestones and also some fluctuations, because the pandemic dramatically escalated the growth with subscribers more than doubling in years of 2020 and 2021. Their subscribers base peaked in 2023, and this was supported by product launches and strategic partnerships. However, after this pandemic boom, Peloton faced some challenges, which was also reflected in this data. As of second quarter of 2025, Peloton reported 2.88 million subscribers, which is a slight decrease from previous quarter, but the company managed to improve their member retention, which is kind of a silver lining in all of this situation. The last metric that we're going to take a look at today is going to tell us more about their expenditures. So we will take a look at their capital expenditures. Those are basically funds that the company invests in physical assets like property, equipment, and technology to support their operations and growth. So Peloton CapEx has varied significantly over the past few years as they adjusted to different market conditions. In 2020, for example, their capex was just above $150 million. They mainly invested in property, plant, and equipment to help them expand during this early growth phase. In following years, so in 2021, it already spiked to over $250 million as they ramped up on manufacturing and logistics to meet this surging demand that they saw during pandemic. In following year, it still stayed high, above $300 million, and this reflected continued investments in production facilities and technology to support its growing subscriber base. However, after that, they faced those challenges that we already talked about, and they saw a declining revenue. So they decided to cut back on their investments. Their capex was cut to under $50 million in 2024. And this reduction shows us that Peloton is shifting back to cost optimization, and they're focusing more on stabilizing their finances during these times of uncertainty. With that, we got a brief overview of what's happening with the company, and we can take a look at valuation. The company is currently trading at $6.48 per share, which is lower than their IPO price. They have a market cap of $2.53 billion and enterprise value of $3.6 billion, with a price to sales ratio of 0.91, which means that investors are only paying 91 cents for every dollar of Peloton's revenue. However, they also have a negative P ratio and price to book ratio, which is kind of highlighting that there are some ongoing struggles with profitability. Also, Guru Focus suggests that the company is currently modestly overvalued. So I would say that while the company has some strengths like market-leading technology, they are improving financials, and they have a strong brand, there are also facing some weaknesses that we cannot overlook. And those include declining revenues and heavily dependence on their hardware sales. Even though that their subscribers base is kind of resilient also in these times of uncertainty, hardware sales represent a strong part of their revenue. And despite their cost-cutting efforts, Peloton valuation is still shaped by skepticism about their ability to achieve this sustainable growth, and there is not much clear about their future. I think that the turnaround will need more smart and strategic moves and also some potential partnerships to push them back to previous success. That's it for Peloton. Let me know what do you think about the company and which company would you like to see in the next episode of Stock Break. To stay ahead on all things investing, make sure to follow us on all podcast platforms. Just search for Digest and Invest. See you next time.